How to sell options on a high ticker stock like Costco is exactly what you're gonna learn today. Costco is over $1,000, 1,043. Now, if you know me, I like to sell naked puts, naked option. I use Tasty because the margin and the buying requirement is a lot less than Robinhood that wants cash secured put. To do a cash secured put on Robinhood, for one contract you will probably need $100,000, give or take. 1,000 times 100, yeah, that's too much. But also, if you use Tasty, you would probably need $30,000, which is a third of the buying power, because it's a high ticket volume. So what do? Lo and behold, we sell Iron Condor. Okay. On this strategy, Iron Condor, I don't do much. I maybe one trade a month, give or take. Nothing special. I like to sell naked puts, but I understand that there are some high stocks that if I can make money, if the reward is worth the risk, everything in the link below. I trade risk versus reward. I do not care about the stock, do not care about the underlying. I only care how much I make for how much I risk. That is it. It doesn't matter if it's Tesla, Nvidia, or 10,000 other tickers. It's all about risk versus reward. And sometimes some stocks are over $1,000. So what do? You are gonna minimize this risk and do a defined risk trade. Let me show you by following everything that I do. What do? I take the ATR, again, free course, link below, ATR of 19.6. This is the average amount that Costco have moved in the last 14 days. Every day on average in the last 14 days, Costco have moved about $20. Up or down $20 on average. It doesn't mean it's every day, but on average they're moving $20 a day. I'm gonna multiply this by 8. Why 8? Because I like to go so extreme that the chance of this getting in the money is so rare that if it does, yeah, I'll own some shares, but in this case I will not own some shares because it is an Iron Condor, but in general I will own some shares because I like to sell naked puts. Watch everything that I do and check the link below. So I multiply this by 8 to go to the extreme. Got a price of 157, 156.8. 150, so let's say 150, and I know this price is now 1,043. I take 1,043 minus 156 on one side, 887, let's call it 1,900, and 143 plus 156, 1,043 plus 156, 1,200 on the other side, okay, give or take. So I know, because I'm doing an Iron Condor. Iron Condor is basically two spreads, two credit spreads on the put side and credit spread on the call side. Let's build it together and show you what I mean. But I now have basically a baseline to sell Costco and make sure that it will be, hopefully the trade assumes that Costco will be between $900 and $1,200 by expiration. If it does, great, I collect the income. I can roll, I can close for a loss, I can close for break even, etc., etc. Why pick this trade? Because ATR is extreme, this is in the green, this is over 50, and this could go maybe to the extreme red line of 1100. Baseline is at 960, so there's still a long time to go. So let's build this together. We're gonna click on trade, and again, everything below. I'm gonna pick 40 days to expiration, the monthly. I don't use the weeklies. I use the monthly, and I follow Tasty. Tasty said sell around 45 days to expiration, and start managing and closing your trades around 21 days to expiration. Every day I go to the market, and anything between 40 and 60 days to expiration I sell. And anywhere between 10 to 20 days to expiration, I start to close my position. This is the everyday. In those time, I've learned from experience, this is the sweet spot between 40 and 60 days, and then the stock doesn't move much, and theta decay all the way for about 2-3 weeks to expiration, close the trade, move on to the next one. So we're gonna pick March 21, just so you see. I'm not taking this trade, the market is closed. I'm just showing you an example how it looks like and what you can look for when you want to trade high ticker value, high ticker stocks like Costco. Netflix is $1,000, Booking.com is at like $4,000, $5,000. There's a couple of them, not a lot, but there's like 20 or so. And if you can make money, if the reward is worth the risk, why not learn Iron Condor as well? So we're gonna pick the 40 days. And remember, we're looking for 150 pips in both sides, which is the ATR times 8, so extreme. So we're now here around 1040. We're gonna see, you see here this blue line. Tasty gives us indicator, not 100%, but just expectation of market makers where the stock should be. So the stock, they expect the stock in the next 40 days to move to between 980 and 1100 and anything in between. I'm gonna go even standard deviation, which is the dotted line right here, and I'm gonna go to 900 right here, and I'm just gonna put sell. Okay, I'm just building this. I'm gonna put sell on the naked put. Now remember, if you do this on Robinhood, you just sell the naked puts like we do on Nvidia and 50 other stocks. Again, link below. We do this on a monthly basis. Every day I post 3 or 4 trades, $300 to $500 in income. It's great. But on Robinhood, you would need $90,000 to sell this to collect $300. Okay? On Tasty, you would need a third of the buying power, which is still, it's great. It's not 90,000, but it's still $27,000 in buying power. To make $300 is too much. That's why we are going to try and build an Iron Condor. We also have 95% probability of profit, 95% at T50 that this will option lose half of its value by expiration. And every day this option will lose $15, $15 until expiration with $300 total. But I don't want to put $27,000 on the line. I don't. And remember, this is just one side, 8 times to the extreme. We're gonna go to the 1200, which is on the other side. You see here 1120 is the one standard deviation. We're gonna go to the 1200 right here. We're gonna sell this too. Now we have built a short strangle. Again, I'm not done. This is great. Now you have a short strangle where you sold 8 times the ATR to one side, 900, and 8 times the ATR to the upside, the 1200, around, give or take, 7.5 ATR, something like that. But I aim for about 8 ATR. That's good. So now, theoretically, we collect $600 if Costco stays between 900 to 1200, which is 8 ATR in the next 40 days. Probability of profit now 90%, and the chance for this option to go 50% lose its value from 600 to 300 is 95%, which is great. But we have $30,000 in buying power, 31. I don't like it. I still don't like it. It's too much. Okay, again, it's much better than Robinhood that will ask for 90,000. I don't know if what they do with short strangle. Hopefully it's still the same 90,000, because the stock can't be in 2 places at once. But 30,000 is too much. So what do? You just do this. 1200, you're gonna buy 1220, just for the example I'm showing you, and you turn this into a credit spread on the call side. Okay, this is a credit spread on the call side. We are buying the 1220. You see there's $20 difference, 1200 and 1220. You're gonna go to the 900 and look for $20 as well, 880, and you're gonna buy this one. You build 2 spreads, which make it a Condor, and look at this beauty right now. Right now, yes, you're not making 600. I'm not aiming to make 600 with $30,000 at risk. Now I'm making $170. Same trade, same anything, everything, but I just changed to a Iron Condor instead of a short strangle. Again, learn everything in the course and all the stuff. Link below for free to join. 170 is the max profit. Look at the buying power, $1,830. You are making $170 right now. This is your money to keep, and it's your money to keep, and you're putting as buying power collateral, not 30,000 like we saw before, not 90,000 if you use Robinhood, but only 1,800 bucks. And the same deal applies. Costco needs to trade in the next 40 days between 900 right here and 1200 right here. You want Costco to trade between the red lines. Your max loss is if Costco go crazy to either side and go below 880 on one side in the next 40 days or above 1,1220 in the next 40 days. You got 89% chance that this option will expire worthless and Costco will not go 8 times the ATR in 40 days. You have 94% chance that this iron condor will lose half of its value, which is great. It's a delta neutral option strategy. $6 theta decay. Every day this option will lose $6 for the next 40 days until it's completely zero. I don't do much iron condors. I don't. If you know me, if you don't, I like about 80% of my trades are selling naked puts. 20% is jade lizard, short strangle, and zebras. Zebras is long term. You can learn about it as well in the link below. But sometimes Netflix is getting expensive, Costco is getting expensive, United Health Group is like 500-600. So all those stocks like 500 and above, where you would need, I don't know, Tesla included, where you would need $15,000 in buying power in Tasty and $50,000 in Robinhood. Another option is to do Iron Condor. Iron Condor is basically you just do 2 credit spreads and your goal is for the stock to stay between the lines of the red, the sell side. If you sell one side, you look for the stock to be at above 900, and if you sell the call side, the call spread, you're looking for the stock to be under 1200, which is 8 ATR on both sides. Let me show you something more. If you see, I fast forward, I click on the analysis button and I fast forward like 30 days in time, and you see all this green. It's all good. 30 days from now, theoretically, you should make, instead of 170, 168. 10 days to expiration, 8 days to expiration, it says March 13. Assume that if you trade at 950, you're still, you're good. And here you're still good. And it's only starting to look bad or break even around here, but not the end of the world. Again, I close my trades around 70 to 80% profit. Tasty close their trades at 50% profit. You need to decide when you close the trade, but I want to add this to your arsenal of tools. There's like at least 5 more strategies in everything that I teach in the school group below. But this is something, again, I don't do it much, but all those stocks are getting the expensive stock. You can still make money on the Costco's, on the Netflix. This is the way to do it. I use the same elements, the same 8 times ATR to the extreme, but I just make it a defined risk. Your worst case, yeah, I know it sounds not much to just make $170 compared to a max loss of 1,800, but consider the alternative. The alternative is not take the trade at all, but the alternative on Robinhood, if I just do what I do 80% of the time, is putting $90,000 on the line to collect $300. I don't want to do that. Tasty, same thing, but put $30,000 on the line for one trade. I don't want to do it, so I'm putting 1,800 on the lines. That means that Costco needs to drop or go above 9 to 10 times ATR in 40 days. If it happens tomorrow, yeah, I will take the loss. I understand that, but most likely 2-3 weeks from now, if Costco doesn't move much, then this 170 will become, I don't know, $70-80. Close the trade, move on. Do this again and again and again and again and again. So that's another strategy to add to your arsenal, as I said. If you like this content, join the school group and subscribe. I'll see you next time.